Welcome back to the APSCC 2021 webinar series. I'm Christopher Slaughter, your MC for the series. Today, the wonders of insurance. We're returning again to the risk management panel. The last one we did was sort of December last year, so it's time to check in again on the insurance industry and the insurance market, see how things are going in that very critical sector of the space industry. So joining us now, Jacqueline Chan is the moderator from Milbank. We're also joined by Stephen Monks from Marsh. Marsh is the sponsor of this week's episode, so we're very grateful for their support for this investigation into the insurance industry. Also, Denis Bensusson from Beasley, Stéphane Reeves from SCORE, and Christian Pattereau joining us from Pacific to give the operator's perspective on insurance and risk management.
Hi, everyone, and thank you for joining us for APSCC's 2021 webinar series. Welcome back again. Feels like I can't believe we're still here in 2021, still from our same living rooms, but it's great to see everyone again. This is the risk insurance and this is the space insurance and risk management panel. Again, we are very fortunate to have a top-notch list of panelists, again, here to answer all of your questions and to answer and really just speak about the market as it stands today in 2021. I'm Jacqueline Chan. I'm from Milbank LLP. I've had the fortune of moderating this panel for the past couple of years. It's one of the highlights that I have in the year, and it's great to be doing this again. So thank you again to Marsh for sponsoring this panel. We would like to first perhaps kick it off with a quick introduction to each of our panelists. Let me first go around the table. Stephen, would you mind saying a few words by way of introduction?
Sure. Hello, everyone. I'm Stephen Monks from Marsh Space Projects in London, and sort of been working with Marsh for sort of over 20 years in the space insurance team, and deal with many sort of different clients in the Asia Pacific region.
Great, thanks, Stephen. Can I trouble Denis to say a couple of words?
Hello, everyone. Thank you, Jacqueline, and thank you, the APSCC. I'm Denis Bensusson. I'm the head of space for Beasley Lloyd's Syndicate in London since 2014. That's probably my 5th appearance at the APSCC, and I'm very pleased to be with you this morning.
Thanks a lot, Denis. And Stéphane?
Hello, everybody. So I'm Stéphane Reeves. I'm the head of space at SCORE. SCORE is actually the 4th reinsurer in the world, but for some specialty lines such as space, we do direct insurance. And I've joined SCORE 15 years ago after a couple of years in the industry. And I'm very happy to be again panelist on the APSCC risk and insurance management panel.
Thanks so much, Stéphane. And to round off the panel, we have Christian, who's bringing us the operator's perspective on this. Christian, could I trouble you to, you're no stranger, obviously, but could I trouble you to say a few words by way of introduction?
Sure. I'm Christian Pattereau. I'm the CEO and founder of Pacific. We're a broadband satellite operator covering Asia and the Pacific. And I'm very pleased to be on this panel. We're invited by the APSCC.
Thanks so much, Christian. So without any further ado, I think it's timely now for us to get straight into what we're going to be talking about today, which obviously is about the space insurance market and discussing latest updates, discussing key issues and challenges, as well as new current perspectives on what's happening in the insurance market for today. So to kick things off, as is customary, as we always do on this panel, we'd like to walk through a quick update on the space insurance market, and Stephen has very kindly agreed to give us a bit of an overview and update on that. Can I turn this over to you, Stephen?
Sure. Okay. Thank you. I'm just conscious that when we were arranging this, I think it was only in November, there was last an APSCC insurance panel. So for this part, we're just going to focus on really sort of trying to talk about what's happened since then. It's not too long since then, but there have been a few sort of notable events. So if I have the next slide, please. Okay, so the main thing, obviously, since the last time we've concluded 2020, and it's understood the first year since 2017 with a technical positive result for insurers. So the total premium income, about 450 million, and current estimates of claims, there's some still outstanding in negotiation, about 450. So a very sort of a modest profit for insurers on a kind of technical basis. But looking at some of the trends we saw sort of through the end of last year, so yeah, basically after the overheads taken off for insurers will effectively regard 2020 as a net loss-making year. And really what we saw throughout last year was a lower placement volume, reduced number of insured launches. Obviously, it's a factor of the number of satellites being launched, insured, ordered even. A stable but sort of higher amount of claims, keeping the pressure on rates, and sort of what we call a hard market phase that began to stabilize towards the end of 2020. In terms of the underwriting capacity, going into 2021, it remains stable. But we have, through the last year or so, lost some key players from the market who've withdrawn, most notably and most recently, I think since the last presentation, AIG withdrew completely from the space market in November. But what we have seen sort of since then is some new entrants into the underwriting market and also increased appetite and activity from other markets that have offset AIG's withdrawal. So we think sort of good risks, but as the insurers perceive them, should continue to benefit from maximum competition from the available capacity. Another notable event to mention since last time was the first claim of 2021, which happened at the end of January, when the Sirius XM-7 satellite that had been launched in December was confirmed to insurers to be a total loss. Okay. Next slide, please. Okay, so just to pick out some key highlights from different areas for 2020. So the premium income, as we said, about 450 million. Claims still running at a similar level. Market profitability, based on figures from AXA XL, a small kind of, if you like, technical profit for insurers last year, but sort of probably a net loss after their overheads are considered. Premium rates, really this was sort of looking at what interests most people in the looking at this presentation. So what we're coming off the back of in 2019 was a very high period of claims, over $1.1 billion of claims. And the first half of last year saw further increases in premium rates, which we think started to level off in the end of last year. And that's obviously been subject to a little bit of, I think, sort of reduction of that, sort of any sort of leveling off as a result of the Sirius XM loss earlier this year. And capacity, as we said, AIG's withdrawal is notable, but it has been offset, we think, by capacity coming in from elsewhere. Next slide, please. So this gives a visual picture of the results, and you've probably seen this slide many times before. And really the notable things are the contrast between I think the 2019 and 2020 results. And you can see 2019, the orange bar, the claims significantly outstripping the premium, the blue bar. In 2020, that has returned to a level where, sort of, yes, the premium is just about ahead of claims. Of course, the insurers would prefer to see a bigger differential that way, because that's, as I say, if you look at some of the previous years, going back 2001, you can see the period that the insurers are aiming for, where the premiums outstrip the claims by a much more of a margin, allowing them sort of a better margin for profit, even after deducting the operating costs. Next slide, please. This is probably the most important sort of slide, I think, here to focus where we are, and it's a slide. I know Marsh is often used in all sorts of different classes of business to illustrate the insurance cycle, which is an important concept that we certainly see in space. Frankly, in periods prior to 2019, where we have a long period where premiums are relatively stable or decreasing, the number of claims is sort of manageable, we kind of easy to forget we're in such a sort of cyclic market. But 2019, the losses there have shown that sort of that's when we had sort of losses. Insurers withdrew, they sort of put up the sort of hardened their position, put up the premium rates, and that has sort of, I think, enabled the sort of an increase in premium per risk, certainly, since before 2019. And that's taken us on to the left-hand side of the chart here, where the market is hardening, premium increases, and now, arguably, as you can see, we're in the top left quadrant here, where it's sort of yet to be determined whether the current level of premium rating is sufficient and the market stabilizes, and the test really is if the market returns to profitability, as is sort of often the case. That's what might be a trigger for more insurers to enter the space field, into the market, generating more competition amongst insurers and pushing us back into the sort of right-hand side of the chart here, where we might see more premium reductions. Okay, next slide. Thank you. And just to sort of wrap up here for the first quarter of 2021, what we see is insurers are now under pressure to sort of internally to increase current rating levels, but then on the other side we've got competitive pressures amongst the insurers for the placement, and of course driven by the clients and the brokers representing them to try and push the rates back down to levels that existed before 2019. So this does generate a degree of competition and pressure on the premium rates. For sort of risk profiles that are sort of more challenging in a way, that might not be quite so easy to do. A bit more challenging, and those rates tend to remain a little bit more stable. Market capacity this year, sort of again, we've seen the loss of AIG, but our opinion is the overall deployed capacity remains significant and actually sufficient for most of the risks to be in place. Market profitability in 2021, it hasn't started well with insurers. It's never good for the market to see a big loss, such as we saw with the Sirius XM loss early in the year, because insurers haven't had the chance to build up a kind of reserve of premium for the year. And they're kind of playing catch up for the rest of the year to try and get into a positive position. So we have to see how that develops, and obviously the sort of the margin against a single large failure has been lost early in the year. So we have to see if what happens for the rest of the year. I think it's true to say that if there's a single further large failure, it may have a very sort of noticeable effect on the market conditions. Technical analysis we've got here, this is a factor of operating in a harder market, is the insurers are focusing more closely on the technical aspects of the risk, and what this means is more differentiation in terms of pricing and coverage between different satellite and launch vehicle risk profiles, especially where there's a higher sum insured, and the competitive pressures aren't so great between insurers. And coverage, in terms of what's covered in an insurance policy, it's a positive really for buyers of insurance. Despite the market hardening, the overall terms and conditions from the insurers have not changed. But I think we have seen some scrutiny in terms of insurance of satellites that have passed their design life. Again, it's a little bit of an unknown, unquantifiable risk. Next slide, please. Okay, just as a wrap up then, so overall theoretical capacity for 2021 is similar to 2020, the launch and InOrbit. AIG withdrawal in November 2020 was significant, but only a small reduction in theoretical capacity, because in most cases it's been offset by increased appetite from other insurers and new capacity coming in. Could have more of an impact for challenging risk profiles. And in 2020, we saw continued cautious approach towards insurers' maximum deployed line size. This is still sort of, for most insurers, below the theoretical maximum, though they have effectively from their management the authority to write up to a certain dollar value on any one launch. What we see is quite often the lines they're offering is below that. So that adds a note of caution really to when we see theoretical capacity of 860 million we've got here. The reality for most risks is the offered capacity is significantly below that. And we don't see that changing in 2021. Okay, I think that's it. Back
Great.
to you. Okay.
Thanks so much, Stephen, for that. And that was really helpful. I think, obviously, you know, the key takeaways from that are that we have a stable market, although we're potentially entering into a hardening phase, depending on how the market performs this year, possible future further losses. But, you know, there is obviously an interest to see how insurers react to new technologies, you know, seeing what happens as satellites pass the design life and the like. I think perhaps before we go into, you know, further follow-up questions on the insurance market and how that's developing and really the views from the underwriters on that, maybe Christian, maybe I can trouble you for a little bit of your own views, seeing as a consumer and as somebody who's on the other side of the fence. You know, in your experience, you know, how have you found the importance of the insurance market to the business that you do? How do investors value the space insurance coverage? And, you know, perhaps what have you found that to be important in terms of the communication to the marketplace that you operate in terms of investors or your financiers?
Yeah, it's very simple. The emerging operators would not exist without insurance. It's vital. Nobody would invest. No private investor would put any money in new operators if the business wasn't insured. It is a very small industry. The satellite industry is very small. It's unknown generally from from investors at large. So the first thing they're going to focus on is the risk of loss at launch. It's something spectacular, something that they used to see on TV, and it's the first thing that comes to mind. So it's one of the very first things that you need to address in an investor pitch, to reassure them, to give them comfort that don't worry, you're going to get your money back if we lose the satellite. It's fully covered, and even whatever we can insure beyond that to actually give them a little bit of return, even for all the years they've put their money in, will give them additional comfort. So I think the industry originally came from more a government angle, where government could shoulder that kind of financing and take the risk of loss without necessarily insurers. But today, with the advent of more and more private operators, with the new space coming, it's absolutely paramount, critical to have insurance, and insurance for the longest period of time possible, and set and cast in stone as early as possible in your project, because investors will put money very often even before you actually place the order for your satellite, and even before you place the order for the insurance. So and that is something that we've had a great support from Marsh, to actually give comfort to our investors ahead of time before we even place the order for the satellite, that yes, the market will be there, and not only from Mars, but also from many of our underwriters, such as Dennis, for instance, Stefan, that we met ahead of time, and that actually gave further comfort to investors. So yeah, it's actually critical. Absolutely, you can't avoid it.
So it's obviously, as you know, just to what you said, it is a fundamental part of loss and risk coverage for any investor or for any financier in any project. What I picked up on is a really important point about the importance of going early to the market to try and talk about rates and obviously figure out capacity. So maybe let me ask this to the underwriters on the panel. What behaviors and practices do you think help operators perhaps help you perhaps provide the best possible rate when you are looking at a market or looking at a project like this? And what would you talk about? What would you think about in trying to address rates, or what would you think would be the greatest challenges that you would face in looking at rates or looking at coverage?
So I can take this one if you want. Yeah. So what's very important when an operator is coming to the market is to create a relationship with the underwriting market, the insurance market, to explain first the business it is looking after. We have to understand the business, and we need to see also the real needs for insurance, where the needs are coming from, and to see that there's an alignment of interest in the full chain of the risk transfer, I would say. And after that comes the explanation of the risk itself from a technical standpoint. And for this, we absolutely need a full transparency. So the dialogue between the operator and the insurer is paramount. And this dialogue is, I would say, handled with the help of the broker and also the manufacturer and the launch provider that the operator has selected. And all of that creates, at the end, a climate of, I would say, trust, if everything is done correctly, I would say. And this is paramount because at the end, this business is, on top of the technical aspect, is also very much a people business. So it's really important to create this relationship and to show a full transparency. And we do appreciate, especially when we are really treated as partner. And as Christian mentioned, for the startup companies, for instance, this project will not be able to exist without the help of insurers. So we really want to be perceived as trusted partners. And this is what we value very much when we are cooperating with some operators.
Denis, anything to add to that?
Yeah, I would just say that I think Christian and Casey are a very good example. He's talked about the criticality of insurance, and I think we are definitely embracing this position in the space industry as enabler of emerging project, new project, and giving comfort to investors and people involved in new technology. I think that's for us a very strong position. And as Stefan said, I think this is a position that is built on trust. I think that's a key element of the relationship we have with the satellite industry and with new companies such as Casey. And the idea is to try really to understand their needs. And the trust basically help us to address those needs and to basically provide tailor-made solutions, which are sometimes going beyond what we typically do. And in order to go beyond the sort of the comfort zone of the insurer, we need this trust. And I think Christian has built that trust. Other operators have done that, and that's what allowed us effectively to be creative and to provide the support for those projects to really sort of develop and mature and be successful.
Well, let me follow that up with another question for everyone here. Obviously, we are in a market that does, undergo ups and downs, and although at the moment it's been on one particular trend, but there are obviously little bits of shocks and uncertainties to the market. So what would you think would be the best strategies to protect oneself against volatility in the space insurance market? Do you have any advice or any suggestions to people looking at that? And Christian, you've gone through this as well. Any other suggestions or thoughts that you might be able to add?
You mean for the volatility, or
to counter volatility in the space insurance market?
Well, it's what we've done is actually to try to lock in the insurance as soon as possible when you know that the cycle is at its lowest. And we've locked in our insurance a good 2 years ahead of our launch. And of course, that was also had a lot to do with what I said earlier, that we needed to give comfort to our shareholders as soon as possible, so that both, I guess, it was a bit of a stroke of luck, but at the same time, we could have waited a little bit more if the market wasn't at its best. In the end, we secured a very good rate for that. Also, other products that would allow operators to avoid volatility would be, especially for the InOrbit side, to secure long-term contracts if they're available at a good rate when the market is at its lowest. So generally that's how you need to play. It's a bit like exchange rate, I would say, or currency exchange. It's cyclical, and you need to hit the market when it's at its best. So there's no crystal ball on that really, but historical data really show that it comes and goes. Now, of course, as an operator, especially an emerging operator, you have only a window of time, right? Your launch is going to happen. You need to place your insurance, and then you have shareholders that have kind of growing concerns that you need to address. So you need to play with that. But yeah, I think there is no magic formula really.
Stephen, Stefan, any thoughts on that?
I'd say something. I'd agree with definitely what Christian said. The request from financiers and whatever supporters of projects is always, I think, sort of to lock in, sort of want a certainty over the insurance availability and the costs as early as possible. It's something the market can offer sort of 2, 3, something in 4 years in advance of a launch. But there is an exposure to the market cycle, as we said. So there is a decision often on any project that should we place the insurance now. If we wait, the rates might get a little bit better. But if we don't, and there's a significant adverse market change, they could get a whole lot worse or higher. So that's the decision that sort of goes, and I think Christian was saying, the decision to go earlier to secure your insurance is often the best one. It's sort of usually our advice to clients to lock it in, get the certainty, get the cover, and yes, as Christian mentioned, the long-term insurance cover, when it's available, is something that's often worth considering, because again, it gives you certainty over that availability coverage and keeps investors, financiers, and sort of other supporters of projects sort of comfortable that the insurance will be there in the future.
Can I add something on this? Maybe there's also something else that can be considered from the operators, because some satellite manufacturers or launch operator, they also provide some side products involving insurance. that can help smoothing the volatility of the market. I'm thinking, for instance, the launch risk guarantee programs that can be made available by a few launch operators that help securing rates for some time at a certain level. So this is a way also to avoid some volatility for the customers of these launch service providers, for instance.
So just on that, what is the availability and cost, for insurance to cover potential launch delays for any reasons? Is that something that you've seen that's cost effective? What's that like right now?
Well, I'd take that one. I'd say sort of yes. This is again, we're talking from the sort of satellite supporters, financiers, investors point of view. The thing, as a broker, we've been asked sort of numerous times in the past is, okay, I see I can buy an insurance if my satellite or the launch vehicle fails, and it will reimburse me the cost there. But what happens if other things happen that sort of whether or not there's any physical loss or damage to the satellite that might delay the launch of the project? You miss sort of business opportunities, milestones, or deadlines to sort of fulfill contracts and so forth. And as yet, that's something that's a little bit sort of a tricky solution for the insurance industry to offer. Let maybe the insurers comment on it as well. But from the broker's point of view, we obviously can provide the launch insurance, and where there's physical loss or damage to the satellite, even before launch, there are solutions available. But where there is just a general schedule delay, supply chain problems, I would say it's a developing field in the insurance industry. There's, I don't think, a lot of a coherent single solution available. But yes, to anyone sort of looking at a project, I'd say, yeah, definitely engage with your broker, talk about this as a discussion point, and it's something that certainly can be looked at, because if not from the traditional space insurers, there may be other fields of insurance sort of that can provide solutions to address concerns in these areas. But I don't know if insurers have anything to say on that.
Yeah. Any thoughts from Stefan or Denis about this particular at this point in time, or is it still a developing field?
Which do you mean in terms of trying to address the volatility in the market?
For launch delays.
For launch delays. Well, it's a developing business. It's been discussed for a long time in the market, and I think the market never really come up with the product which was addressing all the needs of the potential buyers. I think now the demand is becoming more mature, and also to a certain level of volume, which would effectively allow insurer to be more comfortable in developing a book of such launch delay insurance. I think what has always been key is the trigger for the delay, and there is always a sort of a very large number of parameters to be taken into account. But I think the idea to make this product as simple as possible is to make sure the trigger is built on an occurrence base. So basically, there is a physical occurrence, and this physical occurrence would trigger effectively an indemnity if it generates a delay. And I think there are a lot of emerging players in the industry which would be interested and more interested with this product. And I think that's giving us an opportunity to develop a market around it. And I think, again, we spoke about volatility earlier, but that's another way to fight the volatility and to give more certainty and more comfort to emerging players and their investors as well.
So
yes,
go ahead, Stefan.
Sorry, Jacqueline. So yeah, back to, I think as Denis said, it's important, I think, to limit the triggers that will be taken into account by insurance. There are so many triggers, and actually, in order to price a risk, you need to be able to model it. And if we look, for instance, at the last pandemic that impacted the space industry with launch delays, for instance, you see also that political decisions are key. For instance, we had the French space center closed during a number of months, whereas in the States it was open. So how do you model also this political decision, for instance? So at the end, I believe we cannot cover all kind of triggers for a delay. We have to limit those insurance delay to occurrences that we're able to model and to consider.
Understood. So I think just one further question on something that came off what Christian said, which was something about InOrbit. You know, there's obviously now InOrbit servicing capabilities available to mitigate on-orbit loss risks. Is that something that the insurance market has taken a look at? And, you know, how do you want to incorporate, has any thought been given to how these might be incorporated into policies going forward, or what's the current view on your InOrbit servicing capabilities?
Yeah, that's certainly a very interesting development. I think the insurance community has supported those solutions. We basically ensuring at the moment the actual InOrbit servicing satellite, which are being operated as we speak. So we allowed those missions to develop and to happen. So that was effectively a very sort of bold and position taken from the insurance industry, because those technology were not matured, and that was effectively the first time it was used in a commercial world. I think they offer effectively a potential mitigation in terms of, you know, anomaly or failure in space, and they need to be considered as such. I think we would effectively welcome the opportunity whenever there is a failure on board an insured satellite of an intervention of such in-orbit servicing technology. And I think, again, that's something that's giving us basically another tool to resolve an issue. And in that respect, I think that's why we supported those projects earlier. And I think we should continue doing that, giving us more tools and more solutions to provide to our customers.
Well, I mean, it's actually a really opportune time to maybe just sort of move into the concept and the discussion around new technologies, which obviously is a constantly evolving evolution in satellites. So, yeah, how does the insurance market currently assess new or evolving satellite technology insertions? You know, how's the market's attitudes to it? How does it view this? You know, it's a constant question that comes up, and something that we constantly need to keep abreast on. Maybe I can ask Stefan and Denis your thoughts on this, and, you know, let us know where you guys are in your thinking now.
Yeah, Jacqueline, that's actually a very interesting question. I would say that it's even a very hot topic this day because, as you know, there are many new launches that are being introduced on the market, and on the satellite side, many technological breakthroughs are being implemented at the moment. So ensuring new technologies is really a challenge for us. And actually, we have, you know, we first have a qualitative, when we have to ensure a new technology, we first have, I would say, a traditional approach, which consists in analyzing the risk, the design, to perfectly understand what it is about. We obviously look very much at the heritage and the redundancy available, the margins. And for that, we absolutely need a full transparency from the manufacturer introducing this new technology. But beyond this, we obviously also take into account the experience of the manufacturer and the track record this manufacturer has in introducing new technologies. So this is the first part of the analysis. It's a kind of qualitative analysis. But on top of that, we like to complement these analyses with quantitative statistical analysis. And to illustrate that, we have prepared at SCORE a couple of slides regarding, for instance, the introduction of new launches and how the statistic can help us, pricing the introduction of these new technologies. So on this slide, for instance, you can see the evolution of the failure rate of the launches introduced since more than half a century. And you can immediately see that there's an obvious trend of an improving failure rate along the years, which means that generally the experience, the global experience of the industry and the know-how is transmitted generation after generation of launches. So that's the first point. But what's very interesting is that you see that the blue curve shows the failure rate for all launches, whereas the green one excludes the new entrants from the statistics. So it's focusing on the launcher manufacturer that have already flown at least one rocket in the past. And you see that there's a big difference in terms of reliability, such that in 2021, for instance, experienced manufacturer can demonstrate a reliability of 7.6% on their first 5 launches, whereas for the whole pool of launches is more than twice above this number. So with this statistic, we can also evidence that the experience of the company introducing new technology is really key, at least on the launcher side. But there are other elements to take into account. Next slide, please. Yeah, for the launcher, we've also seen with statistics that the kind of launcher has a big impact on the reliability. And this is really obvious on this slide, where you can see that the reliability of the light rockets on their first 5 launches is far worse than the one related to heavy and medium launchers. So you see that this statistic help us also in defining the price for these new technologies that are being introduced. But, and please, could you put the next slide? Next slide, yeah, thank you. But pricing, when it comes to pricing, the pricing of the new technology, on the contrary to what it's often taken for granted, is not limited to the first launches. You see in this slide that the reliability of the launches is improving dramatically from the first launch up to the 10th launch. But we also see a trend that, say, between the 10th and the 20th launch, the reliability is worsening again. So although the technology has been validated, the design has been validated, we see afterward what we call the production challenge, which is to maintain a high level of reliability after the design has been validated. And this applies for both the new entrants as well as the experienced rocket manufacturer, as evidenced by the blue and the green curve. And it's only after, say, the 20th launch of a rocket that has been introduced that we tend to reach a steady state in terms of reliability. So to answer your question, Jacqueline, with this illustration on the launcher side, the assessment of this new technology is a combination of qualitative and quantitative analysis. And the quantitative analysis in particular evidence that the experience of the company that is introducing a new technology, in this case, a new launcher, is fundamental and is key for the risk assessment.
Thanks, Stefan. Denis, anything from you on your thoughts on how Beazley is looking at this?
Yeah, I think new launch vehicle are one face of the new industry and the new technology popping out. The other face is actually the huge development of small satellites, which I will call small sat. It's a generic term that we've heard a lot in the last few years, to the point where actually small satellites today are the majority of the launches. We're seeing with SpaceX that the rideshares are launching hundreds of satellites, small satellites on one launch. So that's, I think the small sat phenomenon is one of the most glaring example of the new technology being introduced in the market. And that's great because that's generating a huge growth in the satellite industry, and this growth to some extent is benefiting the insurance community as well, because that's bringing new business, that's effectively requiring new approaches to risk, and again we embracing that new technology. But I think there are a few considerations to be made, and the first one I think it's a very insightful consideration is the reliability. That's one of the main factor that insurers are looking when being asked to insure risk. And here I call the reliability gap, and the gap comes from the fact that of all the CubeSat, and CubeSat are the majority of the small sat. We're talking about CubeSat 1U to 16U. And as of today, there's been about 1,000 of them being launched since the year 2000. Again, it's split almost 50-50 between single CubeSat and CubeSat part from big constellation. And what has been noted is that the failure rate is huge. The failure rate is around 40% on an annual basis, and that's completely out of bound with what the insurance world and what the satellite industry world is used to. If you want a measure of comparison for the same period, over the same period, there's been about 650 geostationary satellites which have been launched. And usually geostationary satellites are big satellites starting from 1 ton to 6 ton for the biggest of them. So since 2000, 650 have been launched, and the failure rate on an annual basis in average, and that includes all models and all size of satellite, is around 2%. So that gives you a measure of comparison between the small sat and the geostationary satellite, the one in geo orbit. And most of the reason for the failure rate, this high failure rate, is dead on an arrival. So basically, once the satellite is separated from the launch vehicle, it doesn't start. Basically, it doesn't work. There are also very early failure in the first few days during the commissioning period, and also a very large number of failures which are not catastrophic, but which are severe enough to impair the satellite mission. And all in all, that's around 40%. Then effectively, you've got launch failure as well, possibly coming from what Stefan said, because some of the small satellites are using new launch vehicle as well, which sort of compound the risk. And all in all, you're getting to a very, very high number. And that's a very huge challenge for the insurance industry. Yes, we do welcome and we want to support this new technology, but effectively there is a huge gap to be crossed. And if we go to the next slide, I'll outline a few of those challenges. I think the philosophy toward risk is completely different. There is a huge attrition rate, which is reflected in the failure rate. That might be explained to the fact that there are low barrier to entry to build a small satellite. They are not the same requirement. There are no industry standards or guidelines at the moment. And basically you have experienced manufacturer which have effectively better reliability, but you also have effectively completely inexperienced manufacturer, and you find effectively a high failure rate for those. What has been also noted is the high use of commercial of the shelf electronics, and basically electronics which are, taken from the consumer electronic market, and they are not specified for the space environment. And so we, again, for those products, the reliability is not the same. Again, the approach toward redundancy, the usual aerospace industry approach toward redundancy and technical margin is not the same. And with Constellation, and those small sats are usually built as Constellation, we've got the issue of generic defect as well, which is higher than usual. Again, the same problem outlined by Stefan is production and supply chain, and the potential to scale up is generally also creating issues. Testing, obviously, the testing is, again, not usually similar as the one that we are seeing with legacy manufacturers. Again, there are reasons for that, but again, that's a very, very huge challenge for us. And the deployment as well is also a complex addition in terms of risk, because sometimes for rideshare launches such as SpaceX, you can't really choose the orbit where your satellite is going to be dropped off. So you need additional boost to get to your commercial orbit, and you have to use some independent space tug. And those, again, are new technology, sometimes not proven, and they're generating another layer of risk as well. So I think there is a large reliability challenge that the new technology must address, and we want to address those with them. And we've got effectively the insight and the experience of having worked with the legacy operator, and we want to transfer that knowledge so that effectively this reliability gap is crossed, and we manage together to reduce this high failure rate to a sustainable level where effectively insurer would be comfortable to provide insurance coverage beyond launch and beyond what is being provided today, in order to assure the full mission and provide the support that we are providing to geostationary operator, for example.
That's very true, and thank you, Denis, Stefan, for that. I mean, it's obviously I think it's good that as technology evolves, that obviously there's consistent and there's a framework around to evaluate those technologies, and there's a clear understanding of what needs to improve, what needs to change, and what people are looking at in order to ensure the risk and identify the risk associated with that. I think we're almost at the end of our time, but I have two other questions or two areas to really touch on before we finish. I think the other thing that has been of interest recently has obviously been software-defined satellites, and what the market, insurable market has been or is likely to be. Can I open that up to the floor? What do you think the market is going to be like for these software-defined satellites?
I can say that one if you want, which is, yeah, I'd say software-defined satellites, I think they definitely will be insured, and definitely can be insured, and some of them have been insured already in the market to the same level as sort of more historically conventional satellites. I think the challenge is really because of they are a sort of a leap forward in terms of the flexibility of the satellite, and therefore the complexity of the equipment on board. And for those listening who sort of aware of how what's actually in a sort of satellite launch insurance policy, it always contains a set of definitions to defined. We can't use sort of loss adjusters or surveyors like you would in sort of other classes of insurance. So the policy has to contain a definition that both sides, the operator and the insurers, can rely on in event of failure to represent, if you like, a pre-agreement of what will be paid out for different types of satellite failures. Satellites, of course, have many different ways of going wrong. Of course, historically, we've seen that. But for these satellites, the definitions we've used up to now, based on transponders or count of transponders working, the transponder sort of switching of coverage areas, frequencies, even spot beam patterns, can't really be used in the same way, because the satellites have sort of, well, say infinite but very, very high numbers of possible kind of transponders they can, and coverage areas they can provide service to. So it's still a developing field in terms of this. And just thinking about this, there's really kind of four, I think, solutions out there. Briefly say about those. I mean, first one would be some sort of, if you like, expansion of the current approach, where we try to define in the loss definitions every possible, or all the possible connections and sort of services offered by the satellite. And sort of all the variables are covered to their maximum extent. So whatever failure happens, if it's some sort of partial loss of capability of the satellite, you have a set of formulas. I think what we've seen so far, quite a long, complex set of formulas you could feed the sort of test results of the satellite into and produce a single sort of loss percentage that would be effectively have been agreed by both sides prior to the launch. But there is a sort of little bit of concern there that sort of such approaches are very complex and they might not suit all operators. And as well, it obviously is based on a payout that's proportional to the flexibility and the capability that's lost. But the satellite might still be very capable, but if it can't do what you need it to do right then, that's frankly all that matters to you as the operator, where possible. So there's other approaches as well we've considered, such as those being hardware-based. These satellites, if you look at them, quite often they can be broken down to payload components or slices through the payload, and in some way, maybe we wonder if that could be used as a reasonable approximation of the overall satellite capacity. And it's a straightforward ratio on that basis, or with some adaptation that could be used as the basis for the loss definitions. I think another thing sort of discussed is a more of a mission-based approach, where if an operator is procuring a software-defined satellite but has a very specific mission for it in mind that requires some of the flexibility and capability of the satellite, but not all of it. Maybe they have an insurance policy that's based around what they actually need it to for their mission. So if it loses capability and means it can't do other things, maybe that's not actually something they need to make a claim for. But when it does impact what they need it to do, it sort of would pay out a more significant proportion, even though it's very capable in other areas. That approach maybe has an interest for insurers, because what will be left there is a satellite that could be said to be failed for its primary mission, but might have potential applications to other operators. So there could be a good salvage opportunity for insurers. And final thing, the concept we've got down here is to have, quite often when you look at these, thinking about the manufacturers themselves. Quite often when they have some sort of pre-existing sort of system for evaluating the capability of the satellite, using a sort of simulation model, an algorithm, whatever, and maybe that actually provides a ready-made solution for the insurance coverage. And not only that, it's something that's existing at the outset. Whether or not all the details of it are disclosed to insurers, if both sides go into the policy, agreeing that that would be the kind of metric used for evaluating loss, maybe that would be another approach. But I'd say overall it's too early to say there's a single right solution for handling how to define losses of these satellites. There's likely to be different approaches adapted by different operators, given their sort of their own experience of insurance and what they're requiring the satellite to do. And ultimately, this will be driven by the operator's decision to go forward, working with the brokers, and probably in the fullness of time, we'll see an approach settle down. But I'm very confident that these satellites, we can develop insurance solutions from them. But again, I'd say to anyone who, I think it will require, if you like, more preparation time in terms of between the operator and their broker than it would for a more conventional satellite before we're ready to go into the market and seek terms from Stefan and Denny and the other insurers.
Great. Thanks a lot, Steve. That's a really comprehensive answer.
If I can add something to Stephen's comments, actually, Stephen described very well the challenges ahead for this kind of spacecraft. On the short term, it's true that it's going to be challenging, and it shows that it will require a good cooperation between all the parties involved, the customer, the broker, and some leading insurers to agree on these concepts. But the positive point is that because these satellites are very flexible, there will be some kind of standardization of the satellites, and we can also expect eventually to have a more standardized project that will be eventually applicable over and over. And I think once we are able to agree on the concepts, the future is promising from an insurance standpoint, I would say.
Yeah, I think Stefan is right. I think that's very promising, because I think the flexibility afforded by those satellites will not only benefit the operators, but also the insurance industry and the insurance community, because the flexibility offered by those satellites is going to be shared by all the party. And like Stephen mentioned, whenever an anomaly could potentially be there will be multiple ways to address that, and that would effectively allow insurance product to reflect that. And as being said, I think that there won't be one single approach, and there will be many approaches, but that's again the beauty of those flexible satellites, and there will be many solutions to be chosen from, and again flexibility on price as well, I would expect.
No, that's very, very true. Thanks so much, Denise. So last question, just to end on a bit more of a topical note. Obviously there's been a lot of interest in this since the early part of May, with the Long March rocket coming back down through the atmosphere, and on the topic of space debris and space junk. Really, so I think the question to pose to people on the panel here is, what is the market thinking about with regards to space debris? Is this an area that insurers might be interested in becoming involved, either by writing it into policies or by requiring it as part of an end-of-life solution for satellites? Obviously, as more and more satellites go up into space, this becomes more and more of an urgent focus for everyone.
If you want, I can start answering. I mean, as you said, Jacqueline, the situation can be defined as more and more urgent. I mean, it's taken for granted that in the next 5 years, there will be 10 times more satellites in the low Earth orbit, which is actually the orbit where debris risk is the most preoccupying, I would say. Mm-hmm. So more satellite means more potential debris. And if we go on like this, I mean, we might reach a point at a certain time where the Kessler syndrome will be reached, which is, a gravity movie-like scenario, if you want, where everything will be not controllable anymore. And we don't want to reach this situation. And actually, for insurers, the low Earth orbit is becoming more and more of a challenge with regard to space debris. So far, space policies are all risks policies. So we insure any kind of perils, almost any kind of perils, including debris. And the market still insure the impact of debris. Things might change, I believe, after the first real and severe loss of a spacecraft being hit by a debris. And this is not an unrealistic scenario. This might come one day or another. So on our side, what can we do? So as I say, the market is covering that so far, and I think it's going to keep covering this, although some insurers have already said they will stop covering low Earth orbit satellite because of the debris risk. We still offer this service, and I think our role would be to incentivize, a good attitude from the manufacturer of satellites regarding the handling of debris impact. I mean, obviously, at the very end, all these debris stories should be handled by the governments with regulation. It's not the case at this stage. I mean, there are very few constraints depending on the countries regarding the satellite that will be launched to this orbit. And the insurers cannot substitute themselves to the governments. This is not our role. However, at our level, we can maybe impact a little bit. I mean that we can favor those manufacturers that really take into account the environmental constraint in orbit. And I mean in this that, for instance, when you've got manufacturers or operators launching satellite with no propulsion on board, I mean, that's something that maybe for some insurers could not be insured, because with no propulsion on board, you cannot make avoidance maneuvers to avoid debris. And so you can contribute to an increasing amount of debris in space. So it's also a bit up to us to decide with this, crowded, I mean, with this increase in debris, what can we do on our side to favor those that have a responsible attitude in comparison that those who take more liberty regarding to the future of the space environment. So that's my personal opinion on this. I don't know if it is shared by Denis, for instance.
I would echo Stefan words. I think it's definitely a growing concern, especially because the risk of collision is being insured as of today. So it is a growing concern. I would quote Gwynne Shotwell, the CEO of SpaceX, in a recent conference. She said that when you don't have onboard propulsion, it's very messy, and it's a problem. And that's exactly the case, and that's also telling up with the issue of small sat reliability as well. There is an increased number of dead satellites on low Earth orbit, which are either non-functional or decaying or not controllable at all, because there is no emergency procedures, there is no redundancy, there is no propulsion on board, and those are our issue and growing concern. I think as insurer, we have aligned interest with the satellite industry, with the regulators, and we should effectively push regulator to have more enforceable rules. It will be difficult to have international rules because of the blockage at the UN and the fact that most of the treaty dealing with space are old, and they didn't consider the current evolution of the space industry. But at local level, at government level, at national level, there is things to be done to give more punch to the current regulation. And I think insurers have a critical role to play to push regulator to have more strong regulation, more strong requirement to obtain license, cooperate between themselves so that there is no forum shopping between place of license country. We have to make sure that we pushing the right button and we influencing the right people to make sure that the space environment is a less risky place and a more sustainable place. And we have an interest, a strong interest into that, but that's a general interest as well.
Great. Well, thank you very much, everyone. And, with that, I think, thank you for a hugely informative and, again, another outstanding session of just questions and answers and just walking through all the issues and all the matters that we face in this constantly evolving industry of ours. But thank you again, and really kudos to Marsh. Thank you for sponsoring the panel. And again, a big shout out and a great and heartfelt thanks to these awesome and outstanding panelists. So thank you, Christian, Stephen, Denis, and Stefan again. Thank you for your time, and thank you for joining me on this panel. Have a great day, everyone.
Again, another fascinating and information-packed session on the insurance industry. Please do join us next week for the next installation of our webinar series. And if you're interested in what's coming up over the course of the next few weeks, you can have a look at apsccsat.com. So apsccsat.com. If you go, that's the same website that you should be watching this on already. So you should be there. Just go over to the upcoming events and you'll have a look at the schedule of the webinars that are coming up in the next few weeks. Thank you again, and we look forward to seeing you back here next week.